pretty interesting out there. I reckon there's some, basically my interpretation of what's happening in the market is that if I look at the underlying fundamentals, which is demand and supply, the amount of property coming to the market, I pay as much attention to that as I do the actual gross volume on the market, because if you're a buyer, what's of interest is the flow of new listings, not the stuff that's been sat there for 2 weeks, 4 weeks, 2 months, 4 months or whatever. And so when the flow of new listings increases, buyers feel I've got tons to choose from. When the flow of new listings decreases, buyers feel a little more constrained and they start to feel frustrated. So that's as important, if not maybe slightly more important, than the actual gross number of listings. So over the last 6 months or so, we've seen decreasing flow of new listings coming to the market. So that's good for sellers. From a high base, of course, but that's good for sellers. So it's moving in the right direction for sellers. And then the underlying number of transactions taking place for the last 3 years has been increasing. The rate at which it's been increasing is really slow over the last 6 to 12 months. So it's getting better, but glacially slowly. But nonetheless, both of those two major kind of data points, if you like, are improving for sellers. So you have to say that the market is getting better for sellers, very gradually only, but reasonably consistently. But that hasn't come through to actual results improving yet. And so our values continue to erode away over the last 6 to 12 months, extremely slowly again, but it's still going downwards slowly, not upwards slowly. And so we've seen no improvement in values, and we've seen no improvement, really, no material improvement in duration to sell. So if the number of sales continues to increase, and if the number of new listings continues to slowly decrease compared to a year ago, then obviously that will translate eventually into better results, prices and duration to sell, and the risk of not selling reducing. But we haven't seen that yet, is the conclusion. So yeah, it's a very gradually improving market for sellers, and a message for buyers. Still plenty of choice out there, although slightly less fresh stuff coming to market throughout the winter. Still lots to choose from. So there we go. Median sale price, 760 versus 785 a year ago, down 3%. It kind of goes up and down a bit. You look at the, as I've been saying for over 3 years now, we've been broadly going sideways. They had this massive steep decline here as we came out of late 2021. And it's broadly been going sideways for over 3 years now. You can see the deterioration of median sale prices, then an improvement as we headed into the election. Then everyone dumped their stock on the market after the election, and so things got worse. And as you can see here, according to the 6-month moving average, we are about at the lowest point we have been at since that previous peak. We got to that around about the same lowest point in sort of mid-2023, and we're back about down there. So we are roughly about as low as we've been since the previous peak, but we're talking up and down small numbers, as you can see there, 5%, 10% at the most. This, of course, is median sale prices, which reflects not just underlying values, but also mix of properties sold. So it's not the best guide, and that is the Real Estate Institute House Price Index. So this is the league tables, and for a long, long time, we have been leading the league tables in the worst possible way. We have fallen, we being Wellington region, further than anywhere else since the peak. Auckland is not all that far behind us at 22% versus 26%, but we are ahead of the pack, and the whole country down nearly 16%. Interestingly, look down the South Island, Otago, Southland, new highs, and Canterbury also basically at the same level they were at the peak. So these parts of the South Island really haven't suffered at all. Over the last year, I'm afraid the story is the same. We're still fallen further than anywhere else. the numbers are much, much smaller. Obviously 2.6% down on the last 12 months. Not a very big movement at all, but still it is a movement in the wrong direction, and a bigger movement down than anywhere else. In fact, most of the rest of the country has recovered to a certain degree, just not two of the big cities, Wellington and Auckland, and thrown in there Taranaki for good luck. But yeah, so we're leading the league tables overall, and then over the last 12 months, and unfortunately also over the last 3 months. So it's a clean sweep. It's a trifecta in all the wrong ways. And but obviously you can see there over the last 3 months, most of the country is showing gradual signs of recovery. Our region, Wellington, down 0.5%. Yeah, it's not a big movement, but it's certainly not a positive sign. This is a new graph which I don't normally look at, but I just thought I'd look at the house price index. The blue line is Wellington region, orange line Wellington city, and I've highlighted there the previous low point in May 2023. And we are broadly speaking back at those levels now here in September. And you can see there, Wellington region at 3,200. This is an index, of course. So it's not dollars or anything. It's just an index. Values in the region are now at their lowest point since the previous peak. The previous low point was May 2023, which was 3,209 versus 3,200 at the end of September. Barely a difference, but nonetheless, it has gone lower than its previous low point. And Wellington City, not quite. Our previous low point in May, same month, 2023, 27.56. We're now at 27.62, so barely ahead. But yeah, so broadly speaking, our underlying values are at the lowest level now, roughly matching where we got to in May 2023. So the low point since the previous peak back in late 2021. And interesting, if you just look at the shape of these graphs, it's relatively small movements, but as I've said many, many times on these calls and my videos and so on, as we headed into the election, the general psychology is there's too much uncertainty heading into an election. Not a good idea to sell as we're heading into the election. So the amount of supply coming to market completely was strangled. And as a result, because everyone thinks it's a bad time to sell, it becomes a good time to sell. And the results have improved, as you see there. Increasing as we head into the election. And then after the election, it deteriorated. So yeah, the conclusion is try and zig when others are zagging. Yeah. Okay, so looking at the Wellington numbers there, values falling slowly, down to 2.6% over the last year, 0.5% over the last 3 months, 0.7% over the last 1 month. The 1 month numbers, of course, bounce around a bit, but you can see the trend here. The grey line is the 12-month results, so big trough here, heading into the election, which was over here. We recovered as we saw growth, as you can see here in the blue and the orange line here, and then after the election, deterioration, and then pretty variable since then. But the grey line showing the 12-month results, we have seen generally negative results in the last year or so, heading back towards stability here, but we've just taken a dive there in the last month or so. Over the last 12 months, fairly consistent negative territory across all territorial authorities. Interestingly, for a change, over the last 12 months, Wellington City has performed less bad, or least bad out of all those four regions. For quite a bit of the time, Wellington City has been the worst performer. Interesting, there's something funny going on with the Pororua numbers there. I do not believe that Pororua values have fallen by 4% in September. So there's something funny going on there. Either there's an error in the data, or it's just one of those bizarre movements. I don't believe that. So we'll see what the numbers look like next month. Wellington City, and there's the shape of that graph. So pretty similar, just gets a bit more sawtooth, bit more, generally speaking, deeper troughs, higher highs, but broadly the same trend in terms of the patterns and the movements and so on. But look, minus 0.2% over the last 1 month, 0.2 over the last 3 months, 2.5% down over the last year. To me, that is showing more signs of stability than anything else. We're not really falling anymore. So I'm just hoping that this is a sign that we've sort of reached stability. And as I sort of indicated at the top of this, the gentle contraction in new listing flows and the gentle improvement in sale volumes will continue to improve things if that does continue. Improve things for sellers, that is, or owners. New listings 620 in September versus 615 a year ago, 452 2 years ago. Again, that's a massive increase from 2 years ago. But again, September 2023, the month before the election, very few properties coming to market. So it was a real contraction there. And you can see that very, very clearly in the red line here. So this is when the election was right here. And so the amount of new listings flowing to the market, there was very little pressure on vendors overall at the time. Interest rates were still low, employment was still pretty full, but the market had started to tank, and so no one wanted to sell their property, and there was uncertainty because of the election coming up, and so everyone sat on their hands and delayed the decision to put their property on the market. And as a result, the amount of property coming to market reached lows considerably lower than we saw during COVID lockdown. How crazy is that? So fewer properties coming to market than when the market was shut. After the election, then you can see the dramatic turnaround, massive increase in new listings coming to the market, and then it's been, deterioration, down, then up and down again. Overall, the levels that we're at in the last 6 months, significantly lower than we were, sort of winter 2024, or in the 6 months prior to winter 2000, the first half of 2024, I guess that means. So that is a positive sign for sellers. Seeing it, there's the average for September. So at this September, we're bang on the average. That's normal levels of supply coming to the market in September. And if we look at it this way, this is showing the new listings coming on as a comparison to 12 months prior. So when the chart is above the x-axis, that means more property coming to the market than 12 months prior. When it's below, it means less. As owners and as sellers, we want to see strength in the market. So we want to see new listing flow contracting, falling below the x-axis. So you can see the blue bar chart there, been below the x-axis roughly since April this year, with one exception back in August where we were positive again, and the red line shows a trend. So the last 4 or 5 months or so, overall, it's been below the x-axis, so that's an improving market. Using that data point only, that's an improving market for sellers or owners. Number of sales, on the other hand, and this is so the other side of the demand-supply balance, if you like. It's not actually demand, but it's a bit of a proxy for demand. 585 in last month versus 544, 543 the last 2 Septembers. So a gentle increase compared to both the last 2 Septembers. And again, if you look at the trend there on the red line, you can see a gradually but reasonably consistently increasing volume of sales. So again, this is positive for sellers. This is not market deterioration. This is market conditions improving for sellers and for owners. If we look at the norm, 624, so whilst things have been improving reasonably consistently for the month of September, we're still not up to normal long-term sale volumes for the month of September. You can see here, typically over the last normal times, 600 to 800 is the normal sale volumes, and we have not, on average, that red line is only bouncing around in the bottom of that range, so it's still a lowish number of sales taking place compared to what's normal, but it's just significantly up from 2 to 3 years ago. And again, see the other way around. So on this chart here, from a seller's perspective, we want to see that red line above the x-axis. That means improving conditions for sellers. So more sales taking place. So you can see there for a good couple of years, we were seeing reasonably consistently and not insignificant increases in the number of sales taking place, but off a very, very low base. In the last 4 or 5 months, the degree to which the sale volumes have outstripped 12 months prior is really marginal. We're talking 5% or so. So it's really only very gentle improvements in market conditions using this metric for sellers. Number of sales, yeah, where are we? There we go. How long does it take to sell? It's still a long time. Again, from a seller's perspective, you don't want to see that red line going up and to the right. You want to see it coming down. So the long-term trend there over the last couple of years is increasing. We're at 49 days in September versus 51 and 34 1 and 2 years ago. Again, September 23, market was quite strong, and that reflects that 34 days versus 49 now. Again, everyone thought bad time to sell before the election. Actually, good time to sell. You want to zig when everyone else is zagging. But back to the starter point here. So yes, you can see the long-term trend there over the last 6 months. It's increasing, but over the last 4 months, the actual monthly results are declining there from 54 days here to 49 days in September. So very recently, that would appear to be improving. So let's keep an eye on that, and it'll be interesting to see if that red line starts to turn. Inventory, 16 weeks versus 15 a year ago, 10 2 years ago. Again, 2 years ago, market was really quite strong. 16 weeks is slightly longer than the long-term average, which is 15 weeks. So on that basis, you'd say that we're only just into buyer's market territory, slightly more inventory than what is normal. It sure doesn't feel like a buyer's market though, and that is perhaps because over the last 10 years, the norm has been 10 weeks, and 16 weeks is significantly longer than 10, which is kind of what we've gotten used to. Trading listings, you can see there we had this big drop off in supply levels, and interestingly, the spring rush of new listings coming to market, we would normally see that in September, particularly the second half of September. The spring rush really only came in October this year, which is a bit on the late side, and it hasn't been an enormous increase in listing volumes there. So you can see 5% over last October, again 53% higher than this time 2 years ago, which was when we hit the election. And there's looked in another way compared to 12 months ago. So you can see now we are almost back to parity with where we were in listing volumes, whereas for the most part for the last couple of years, it's been higher than we were 12 months ago. We're now heading back towards parity. And obviously, as a seller, what we want to see is this red line going down below the x-axis. So in summary, folks, values are slightly down versus 12 months ago. New listing volumes level with 12 months ago, and back to norms for September. Sales volumes up versus 12 months ago, but still they haven't met up with September norms yet. But those two things, overall, the trend for new listings has been down, and the trend for sales volumes has been up. And both those two things combined are fundamentally what will ultimately drive results. And so these things are definitely producing slowly improving market conditions for sellers, but we haven't seen that come through in prices or duration to sell yet. Trademe listings slightly up versus last October, and the new listings in spring was really quite a late spring rush and a little bit muted. So for sellers, as I've said a number of times here, the conditions are gradually improving, but not improving to values yet. And there's still plenty to choose from for buyers, although in the last 6 months, the flow of new properties coming to market has been slightly constrained, which might feel slightly frustrating for buyers. So that's what I got for you tonight. But an opportunity now if you want to have a chat about anything or ask questions or comments, or be interesting to hear if any of you are in the market at the moment and how you're finding things. No, that's it. You don't need anything. Don't want to have a chat. Igor, I saw you were trying to get in several times. Hopefully you got in eventually. But if that's all you need, then yeah, thanks for checking in. Sorry about the confusing start there with the wrong link being sent out. But yep, thanks for checking in. And if you want individualized advice, of course, you know where to reach me. Yep, take care. See you next time.
Thank you.
Cheers.